Howdy hoo, all my stock market gamblers. Welcome today. It's Friday, made it to the end of the week. What do we got going on today? Well, the markets are down a little bit. Dow's down about 100, Nasdaq's down about 100. This whole week, though, I mean, it's pretty been not, just straight line flat, right? We're about the same place we started the week. And we really just, the market's searching for direction. I do think we'll get the pullback, but, they might want to try to push the market higher. I'm not betting on that. I have a small short position on. I think we're going to pull back. I think we're going to come down, and I do hope and I do think that the recent low in June will hold, and then they'll move the market up higher from there. But right now, the VIX, it's screaming that the volatility is going to increase, which would bring the markets down. The VIX is screaming that we're going to get an up move in volatility, and then the markets will move lower. All right, let's move on to the housing market. Now, I think the housing market, I think it's headed for a depression. Now, what's funny today is you don't even know the difference between a recession or a depression. Today, we don't even know if we're in a recession, right? We've had 2 negative quarters of GDP print, but if you look at the mainstream media, they'll tell you we're not in a recession because we got low unemployment. Well, that unemployment number is going to be starting to go up pretty soon. I got news for you. It's going to be really interesting to see what they say when we get the next quarter of a negative GDP print. Will 3 quarters of a negative GDP print, will that cause them to admit that we're in a recession? I don't know. Maybe we can never go into a recession again, according to their terms. But let's talk about a depression, because that's where I think the housing market's headed now. Depression, not all that bad, right? It's just an extreme recession. That's what it is. It's a recession. Now, the recession's already been 6 months, right? Started in January and we're still going. Well, I guess that's about 8 months now, but we've had the 2 quarters of the negative print. A depression would be defined by over a year to 2 years of these negative GDP prints. That's what a depression is. Now, what characterizes a depression? Well, I get an increase in unemployment. I do think that's coming. You get a drop in the available credit. If like some credit cards are already lowering the limit that you can have. So look at the mortgages. It goes from 3% to 6%. It's harder to borrow money. There's the diminishing output. There's more bankruptcies, and right now bankruptcies are spiking. Look at small businesses. I mean, they did a study, and anyways, 50% of them say they're not going to make it through the year unless something changes. 50% will not be here this time next year, and those will be spiking bankruptcies. Sovereign debts will be defaulting around the world. They won't be able to pay their bills. We may be one of them in the United States. And of course, you get a reduction in trade between countries during the Depression. All right, so let's see how this portrays to the real estate market. Now, the real estate market started going down in January, so I'd say we're in a recession. Now, we're about 10% off in many areas. That's just called 10%. Some areas are more. Of course, your area is still up there, but some areas are less. All right, so 10%. Well, as we go in from the recession into the depression, what happens? Well, you get more downward movement, right? Now, in the Great Depression, the houses only dropped about 26%. 26%. Now, that's not bad, Mike. 26% is not bad, right? And well, you see, they didn't have the leverage of houses in the Great Depression. During the Great Depression, a lot of people did not have a loan on their house because the banks didn't make those 30-year fixed rate loans with 3% down. No, if you had a loan on your house, you probably already put down 30 or 40% on your property. Now, during the Great Depression, houses still sold. As a matter of fact, you could buy many houses were for sale for just property taxes. If you were to pay the person's back property taxes, you now own their house. Now, could this happen again? Probably not. Of course, not in your area, but if you get a total collapse, this is what will happen. And people will be buying houses for just paying the back property tax. Now, property taxes are high. You get $1 million house, you know what? Well, you're looking $10,000 a year. They're behind 5 years by the time it hits the books. All right, you got to pay $50,000 just to get that house. Well, that could happen again. Now, I know that's being really negative, and I don't expect that to happen, but I do think we're headed towards this depression level in the housing market, which I would call half-off sales. Now, this is fascinating to me. All right, so Zillow has now formed a partnership with Open Door, right? They got this partnership going on now. Now, this is funny, okay? Zillow lost a fortune, about $1 billion, buying houses and trying to flip them. They were not successful at this. Now, Zillow just came out and they reported their numbers and their stock dropped, of course. I mean, their stock, used to be a high flyer, but I mean, it was up at $200. Now it's down around $35, about 80% off, maybe a little more. But Zillow, they lost a lot of money trying to flip houses. The house flipping business is a very difficult business, especially if you're trying to do it on a national level, because house flipping is very localized. It works in some areas, doesn't work in other areas. And it works much better in an up market than it does a down market. But anyways, one thing they did good, they got rid of all of their houses that they bought. They only have 76 houses left on their books. But now what's fascinating to me is they want to get in this business again through the back door, if you will, through Open Door. All right. So they've got a partnership going with Open Door now. Let's talk about Open Door. Well, Open Door just got fined $62 million. Now, why? Why'd they get fined? Well, for misleading home sellers. See, they would approach the home sellers and they would tell them that it's much better to sell a house through Open Door because Open Door will give them a cash offer than putting it on the open market and letting them bid on the MLS. Now, look, if I'm a real estate broker, full disclosure, now if I take a listing and in the old days, we could take the listing and it'd be called a pocket listing. We wouldn't put it on the MLS because we try to sell it ourselves. And that way we could get both ends of the commission. We get the buyer and the sell end, right? Now, okay, so nowadays you can't do that because you will get sued. Look it. It is to the advantage of the seller to put their house on the MLS so that other agents can, bring their buyers, and it's kind of like an auction. They can get bidding wars going. But you see now, if you go to Open Door, they'll tell you, no, don't put it on the MLS. That's a dumb way to sell it. And if we'll give you more money, you'll get more money by taking our cash offer. We'll save you all the headaches of putting it onto the MLS. Well, what happened is they got sued and they got fined by the FTC, $62 million fine. Now, what's funny about this is Open Door does not make any money. They lose money doing this, right? But they got to pay $62 million without making any money. Now, Open Door, it used to be at $35 a share. You can now buy that for about $5. Now, it's having a really good day today. I think it's up about 20%. Went from $4 to $5 today on the news of the partnership formed with Zillow. So Zillow, they're going to have the cash offer still, what they were doing, and they were buying the houses. But now they're not going to buy the houses. They're going to let Open Door buy the houses because this makes so much sense because they lost a lot of money. So let's have Open Door lose a lot of money. So you got two companies. They're down about 80% each on their stock, and now they formed a partnership. Very fascinating to me. Now, I know a little bit about this market that they're doing. All right. So anyways, when it was announced that we're in a recession, the Google search that became very popular was sell my house fast. Sell my house fast. That Google search went up 300% once it was announced that we're in a recession. Okay, so if you Google sell my house fast, you will get a lot of people trying to buy your home, and they'll have cash offers for you. And these cash offers will be about 30% below the market value. Let's say your home's worth $1.5 million. The cash offer will come in around $1 million, and they'll try to flip the house themselves and make the difference. You see, so it's kind of like they're trying to steal your home, trying to steal your equity, and this is what Open Door does, and they got caught doing this, and apparently the FTC doesn't like it when a big corporation comes in and takes advantage of the small home seller, and they fine them $62 million. But these iBuyers, they'll make you these offers at 30% below the market, right? They'll make the offer low, but it's more advantageous for a seller to put their house on the MLS. It's just more advantageous advantageous because they will get the highest and best offer that is available out there in the marketplace. So you have these companies like Open Door and like OfferPad coming in and offering, home sellers 30% below the market, right? And then you got these other companies like BlackRock and Blackstone coming in and buying all the new homes. They'll buy a whole city block of them, and they'll pay 10% above listing price. It's kind of a funny thing. They're both doing the opposite, and I think they're both evil, to tell you the truth. I really do. Now, evil's a very brutal word, and I get that, but anyways, I don't think that either one of them benefits the general public. Now, if they want, I've been in the home flipping business before. I understand the business a lot. It's very localized, very hard to do on a national scale because you don't know what's going on in each city. I know my city like that. I can go and look at a house and I can tell you what that house is going to sell for. Now, I can't tell you what the seller wants to list it for, but they always want to get the price Billy Bob got. But I will be able to tell them what the price is going to sell at. And that's why they tell me that I might not be the listing agent for them, because they want to list up here what Billy Bob got and then work their way down. Now, they tell you to take the listing even if it's overpriced, because eventually they'll come down. Now, I don't like taking overpriced listings just because it's a waste of my time. Eventually some of them do come down and sell, and I do have regrets about not taking some of them. So maybe, I should have taken some of these overpriced ones and then talked the seller off the edge of the cliff and tell him he's got to come down if he wants his house to sell, because that's the direction we're going. Now, I do like the fancy talk they use. Now, the president of Zillow, he came out and said that, houses, they're not really going down. They're just rebalancing from the pandemic levels. Well, exactly. Rebalancing means they're going down. They can't say that because they have a big stake in the real estate market. They always want houses to go up. Well, houses don't always go up, and right now we're starting to go down. We started back in January. We're already coming down. Now, a lot of people are in denial about that. They can be in denial all you want them. My area never goes down. It only goes up. Well, good luck with that. I hope you're right on that. But I'm telling you, the market is just shifting, and the downshift is just getting started. I do not buy this. A lot of these real estate agents, they're out there telling you, look at mortgage rates, they come down from 6%. They're almost back to 5%. You got to buy on this dip in mortgage rates because we have this dip in the housing, dip in the mortgage rate, dip in the housing. Don't buy into that. This is not the time to be buying a house right now. I'm telling you, sit back, enjoy the show. It's going to go lower from here. Look, I know you got your own opinion. This is just my opinion. Yes, I'm a real estate broker. Yes, I have a computer and a microphone. And yes, this is my opinion that we're going to go lower. We're going to go a lot lower. Now, do I think we're going to get down to the Great Depression levels where you can buy a house just for back taxes? Wow, that would be wild, but I don't want to live in that world, so I'm praying that that does not come true. Anyways, if you like this stuff, I'm Tall Mike. Give me the 2 thumbs up if you can. Punch the subscribe button so we can talk next week. I think it's going to be a real exciting week in the stock market. We'll see what happens. Get out there. Have a great weekend. Bye-bye now.